Pakistan's private sector borrowing from banks has dropped sharply despite a major cut in interest rates. According to the State Bank of Pakistan, bank advances fell by over 1.5 trillion rupees between January and April this year. That's an 11% decline, down from 14.7 trillion to 13.1 trillion rupees. Advances, or lending to the private sector, are usually seen as a key sign of economic activity. But this drop comes at a time when bank investments in government securities have gone up sharply, rising by 3.2 trillion rupees in the same period. Economists are split. Some say the government is intentionally slowing growth to control imports, especially after the trade deficit hit a record $3.5 billion in March. The current account surplus also shrank from $1.2 billion in March to just $12 million in April. Even though interest rates have been slashed from 22% to 11%, the private sector remains cautious, with political uncertainty keeping businesses from taking on new debt. At the same time, bank investments in government papers rose to 33.2 trillion rupees by April, suggesting the government is borrowing heavily to meet fiscal needs. Deposits also grew, up by 1.7 trillion rupees since July last year, reaching 32.3 trillion by April. However, banks remain under pressure, partly due to uncertainty around the 15% incremental tax. While private borrowing may stay flat, most analysts expect bank investments in government securities to keep rising.